Last week, we brought you the news that unemployment in Australia has hit a 3-year high at 5.6%. Our coverage of the Australian economy continues as mining regions thrive off Chinese demand while manufacturers struggle under the strength of the local currency. Zoë McHugh of ANZ joins me on the phone now to discuss today's RBA policy meeting minutes. Zoe, one of the major points of the meeting minutes released today was the indication that Australia's economy could require further cuts to the interest rate. What are the drivers of this position?
Natalie, the thing at the moment for the RBA is that they're facing some headwinds. So there are some parts of the economy that are not yet responding to last year's rate cuts, for example in the business sector, tighter fiscal policy and the Australian dollar. But inflation is well within the RBA's target band, so that allows them to cut if required. But they did also note today that rates are at historic lows, and there are some signs that parts of the economy are responding to last year's rate cuts, for example in the housing sector. So this makes things relatively balanced for the RBA at the moment.
With the current inflation outlook also sympathetic to this move, should we anticipate a rate cut in the coming months, or will the RBA continue to maintain its wait-and-see stance?
There is scope to ease further, but this will obviously depend on the balance of contractionary forces that I mentioned earlier and the extent of recovery of the interest-sensitive sectors. ANZ is still pricing in 2 rate cuts for this year, so 25 basis points in June, which is similar to the current market pricing, and another cut in November. Trends in CapEx and the labour market will likely be important in framing the RBA's view as the year progresses.
Australian Prime Minister Julia Gillard claimed on Friday that her government's tight fiscal stance would support a reduction in interest rates. However, with both the government and central banks still grappling with a 2-speed economy, could this leave room for perhaps bolder monetary policy?
Well, Natalie, we think that fiscal policy is only one factor that the RBA considers when they're adjusting cash rates. And they did note today that rates are already at historic lows, and we think, notwithstanding the 2 further cuts that I mentioned earlier that we have priced for this year, a pickup in global growth in the second half of the year will allow for an eventual normalisation of interest rates.
In a recent speech at the Australian Securities and Investments Commission annual forum, reappointed Governor Stephens admitted that reforms that seemed so simple and obvious in 2008 have turned out to be much harder to implement than expected. How much has the Australian economic picture changed since then?
Well, the Australian banks were not as badly affected like the global banks were in 2008 due to a lack of exposure to subprime. But notwithstanding, domestic banks are in a much stronger position since then due to the change of funding base from international to domestic deposits, which now make up over 50% of banks' funding, and changes from our regulatory authority, APRA, which have also served to ensure that domestic banks are protected against any further significant downturns that the global economy would see or could see in the future.
And lastly, Zoe, what reaction did we see in the Aussie dollar off the back of these meeting minutes? And similarly, if the Australian currency is to stop damaging export trade, realistically, where do we need it to be trading?
Well, the Australian dollar is actually trading a little bit higher now than it was after the release of the minutes. And we think that the Aussie dollar will stay high this year, around 105 against the US dollar. And this is due to strong foreign direct investment, safe haven demand for Australia's AAA rated bonds, and relatively high interest rates. Certainly the Australian dollar is above fair value, but the RBA did note recently that Australian businesses are adjusting to the high value of the currency.
To see how this news continues to impact the Aussie dollar, tune into my Asia Pacific themed Targets in Focus interview tomorrow with Commonwealth Bank of Australia's Peter Dragicevic. Goodbye for now.